Today we're going to have a video that, okay, hold on a second. All right, no laughing. Hi, I'm Cameron Griffin. Today we're going to have a video where we meet with a local lender. His name is Charlie Hall. This is somebody that I trust with my own affairs, and I use him quite a bit with clients as well. The reason why we're doing this is because as a client, you have to trust your real estate professional. And because of that, we need to work with people that are an extension of that trust. It is absolutely critical that we make sure that in the areas that we don't specialize in, such as lending or accounting or other things that we're not licensed to do, that we have your best interest in mind by utilizing the best resources that we could possibly pull on. Today, Charlie's going to cover a few things. One is going to be just the basics of the pre-approval process so that you understand how quickly you can actually get pre-approved. He's also going to be talking to us about the different loan programs out there and how he's gotten creative. This has been extremely useful for me. I've had some complicated transactions, not just for my clients, but for myself. And part of the reason why I've chosen Charlie is because he's incredibly knowledgeable and he knows how to work outside of the box and come up with creative solutions. He's also going to talk to us a little bit about what's going to be going on in the market and where we're sitting right now. These insights are absolutely critical. I could give you my insights as a real estate agent about what's going on in the real estate market, but just as importantly, having a lender that knows how to speak to the mortgage and bonds market is absolutely critical as well. A lot of my insights that I have for my clients, I have to take into account the insights that other professionals have, particularly somebody like Charlie. We'll go ahead and start the video, and just remember, if you have any questions or if you would like to discuss your real estate needs, my contact info is in the description.
I'm Charlie Hall. I work at Cross Country Mortgage. To get pre-approved, it's not as difficult as you would think. I like to have a conversation first with the client, first of all, to get to know the person, see what their plans are, and if there's any ins and outs that I need to know between them, maybe a spouse, a partner, whatever it might be, to know who I'm dealing with and how we're going to do it. The process to do an application takes between 15 to 30 minutes, maybe a little longer if you have complicated financial, depending upon the person. It's just a case-by-case basis. We'll see how many trade lines you have. We'll see if there's some credit card issues where you might have higher debt limits or higher debt balances, where we need to maybe pay that down to get a higher FICO score. There's all these different things we can do to try and get you prepared. So the question is, how much do you want to pay per month? Because then we can work the numbers backwards from there and see what you qualify for. And then we can figure out what to do from there, because sometimes you can get a gift from a family member for a higher down payment. Maybe you have a co-borrower. Maybe you have your spouse that you didn't think you could get on the loan because they don't work, but they have a good credit score and they have some assets or whatever it might be. There's different, like if you want to buy an investment property, you don't need to have 25% down. Sometimes you can have 20% down. And you don't need to have rental income to supplement. Like let's say you have a mortgage and the combined two mortgages won't help. There's different ways to offset the expected mortgage for an investment property. Now, secondary homes are the same thing, where you can, you don't have to put 20% down, you can put 10% down. When people are looking to buy a new home and they haven't sold yet, there's a couple of options. You can do a bridge loan, there's a cross-collateralization loan, which is technically the same thing in different ways. But sometimes people just don't know that they can qualify for both mortgages. So like, let's say you want to buy a secondary home, but you could also buy it as an investment property and then get rental income to offset that. There are different things we can look at to try and figure out how you can afford both, because sometimes you can also create a home equity line of credit on your current mortgage to take money out and use that to buy another home. That's obviously a case-by-case basis, because you got to be able to afford that line of credit plus the mortgage plus the new mortgage. But there's ways to access the equity in your current residence if you didn't have much for a down payment on the new home. There are also loan programs where if your intent is to sell the home after you purchase the new home, they will offset that first mortgage because you got to sell it within a certain time period. So the departing residence, the removal of the departing residence mortgage is key in that aspect. So there's options available. Right now, especially with mortgage rates higher, there's another thing you can do to help offset the higher cost is to get a temporary buy down set up. And that will help lower the payment for the next 1, 2, 3 years, depending upon how much you can get from the seller. But we're trying to figure out what the best option is for each client. So Again, it's just a case-by-case basis on that. What's coming up in the mortgage market? It's definitely an interesting time in 2023. Inflation has been high. It is coming down, especially heading into the summer months, but interest rates are still going up. And that's primarily because of the fact that there's been an influx with the banking crisis where banks are selling the treasuries or the mortgage-backed securities that they had to come up with capital to give to their clients because it's a banking crisis and people are worried about their money. Now that's flooding the market with, it's flooding the market, basically supply and demand. It's keeping interest rates higher at this point. Moving forward in the future, because of the spending that's been happening, I think that we are going to be heading into a recession. And during a recession, there's always a refinance boom. So if you purchase a home now, you got to make sure that you're not paying extra discount points just to have a lower rate, just for the sake of having a lower rate, because that rate will become available in a very short period of time. And then you do a refinance to get that lower rate. And refinances are less expensive than a purchase transaction because of the title and escrow fees. And our company also offers a refinance bonus, if you will, to help pay for some of the costs, because we know that when rates come down, people want to have a lower rate and they're going to refinance. Another issue is, with where the cost of living is right now, a lot of people are depleting their savings, living on credit cards, and with interest rates going up, the prime rate going up, people are really bleeding because of the fact that they're paying so much towards interest now. So people that have super low rates from the refi boom in 2021, they might need to look at their blended rates. You want to look at your blended rate because you don't want to have a 3% interest rate, but then you have a credit card at 25%, and then your car loan's at 11.5%, and then you could actually look at a blended rate and see where that is, and then you might be able to save a lot more money if you do a cash out refinance when rates come down. So what sets me apart right now specifically is, a lot of interest rates right now, they just want the lowest rate. Not knowing that what goes into the whole process is communication, trying to get all the work done up front so it's easier to proceed, so you're not running around hectic at the very end. Availability is another thing, like I'm available nights, weekends. I have a family that my wife is a stay-at-home mother, plus we homeschool. So I'm available to work whenever it needs to be. And so, if somebody needs a pre-approval letter, or if somebody has a question, like they had a bad night of sleep, they're worried about something, because a purchase of a home is one of the biggest things you're going to do in your lifetime financially. And so the availability to speak and talk to them, to walk them through the process, to make sure that their questions are answered is key, because it's not a one and done thing. We always check in and touch base, see how things are going, to see if anything's changed, and it's that kind of touch, and it's a holistic view of lending versus just one and done, and thanks for your business, I'll talk to you later. So it's trying to create a relationship where, like for example with you, you were a client first, and then suddenly you became a real estate agent, and then we started working together from there. And it's just nurturing relationships over time because you have their best interest in mind. I'm here to help people, grow liquidity in the future for eventual retirement, and it helps them and their family and their friends. And that's the basic idea of trying to be a successful loan officer.